Hi, everybody. I'm Mark Elenowitz, and as he mentioned, I'm the co-founder of Upstream. We are the only national securities exchange in the world. We're not a crypto exchange, we're a securities exchange that's powered by the blockchain. And I was here last year and nobody really listened. Actually, a few people listened, but I'm the guy that you really don't want to hear from, but I'm the guy that you need to hear from, because the reality is many of the asset classes that everybody's dealing with today are securities. And whether you like it or not, and I heard one of the other panels start using other names like governance tokens and trying to change the reality of what these instruments are. It's unfortunate, but if you look at it and you have the expectation of profit, I'm going to explain it to you in a moment, it's a security. And in the US, securities need to be registered or exempt. And what that means is a lot of people are confused about it. A registration is what you think about as an IPO. It's something that goes before the SEC. It's done through what's known as an S1, and the shares are registered and able to be sold to the general public, to non-accredited investors, and it allows liquidity. There are new things that came out, and I was one of the pioneers in something called Title IV of the Jobs Act, which was Reg A+. And what that was is we created the ability for it to trade on a national securities exchange, the New York and NASDAQ. I did the first two onto the New York and several onto NASDAQ. But how does that fit into NFTs? So when you think about exemptions, exemptions are how can you sell something to somebody that's exempt from registration. And the Jobs Act that Obama put into place basically had three areas. There was Title II, which is private placements, which enables you to sell to accredited investors. You could go out and put an ad in Times Square. You can put an ad in the newspaper, television. Anybody can buy it, but you have to be accredited, which means you have to have a $200,000 income or $1 million net worth. Well, that doesn't really work for DeFi, because it's the whole idea is letting the whole world participate. But the problem is those shares are restricted for 12 months. So if you buy something, you can't sell it. So I use the word shares. It doesn't matter if it's a share, an IEO, a token, an NFT, it's all the same. It's equity ownership. Then there's something called Reg CF, which is crowdfunding. In crowdfunding, you can raise up to $5 million from non-accredited investors, but you can only do it on a crowdfunding site. So that doesn't really work, because how are you going to market it from your own website or from the web, or if you're using any type of Web3 technology? It won't happen. And then again, the problem is the shares are restricted for 12 months. So that doesn't really work if you want to buy something and sell it. So then the only other option that you can do is something called Reg A, which allows you to sell to non-accredited investors. You can sell it immediately. There's some issues with state blue sky laws and other things like that. But all of this comes, you have to have KYC. You have to have AML. And all this fits into Bank Secrecy Act and Patriot Act. So when you look at doing these types of activities on OpenSea, for instance, it's an anonymous marketplace. You have no idea who you're dealing with. And that's the whole point of it. And you're dealing with an ETH. But how can you stand before your bank? And how can you stand before a regulator and say, you know the source of funds, and you know who participated? And on top of that, those type of activities can't be sold to Americans, because again, it comes back to registration or exemption. So the real thing that we've seen over the last couple of years, and really in the last year, and we get these questions all the time, is you want to do some type of fractionalization of music, royalties, and I know there's going to be panels about this today. It's really cool. You can finally own a piece of music, and I have a lot of entertainers and musicians that trade in our marketplace that do offerings and are actually owners of ours, very famous musicians, and they want to do fractionalization of royalties. They want to finally get what they deserve, and they want to give their fans the chance to have ownership. The problem is it comes back down to registration or exemption. So the SEC, unfortunately, and Gensler's been very vocal about this, is that all NFTs, all digital assets, all crypto assets are securities. Now, I don't really agree with that, and I think probably everybody in this room doesn't agree with that, but there are certain types of assets that are absolutely securities, and there's certain types that are not. But the bottom line is, and this is self-promotion here, we as a securities exchange, it doesn't matter. If you're thinking of doing an offering, if you're going to do any type of fractionalization, anything where somebody is going to want to have an ownership, a royalty, a payment, do it the right way and do it on an exchange. Because if you ask for forgiveness later, that's where a lot of people started taking the positions the last few years. That's starting to change, and we're seeing more and more of this happen. Now, there's other NFTs that people think of as utility, and those are the NFTs that are available that don't have economic interest or benefit. These are the ones that we're also excited about. It's the future of Web3. It's the future of advertising, the future of being able to open up content, pay-per-view events, ticketing, all the things that come out in the world. These are things that are available to you. So the problem, and this is we don't really have the solution today, is what do you do other than using these types of exemptions? Because Reg A, as I said, you can sell it to non-accredited investors. It's a great idea. There were a couple of people that actually filed with the SEC to do this. But since Gensler came in, that ability to get those cleared through the SEC, you're talking about millions of dollars of legal fees. You're talking about audited financial statements. You're talking about 9 to 12, even up to 24 months. And the reality is these are not getting cleared today. So it doesn't really leave much. And then you have to think about how do you resell that, because there's federal law and then there's state law. And then there's issues relating to taxation. Then what you have is, as I said, you have the holding periods. And then you have to figure out, do I need to register as an exchange or an ATS? Well, Coinbase is a classic example. They got a Wells notice last couple of weeks, and that's been something that's been in the press quite a bit. The question is, are all those assets securities? And the SEC is saying that you need to register as an exchange or a broker-dealer, but Coinbase is saying we tried, and you're not giving us the framework. Gensler just the other day testified before Congress and said, we don't need to change the rules. They've been around. It's called the Howey test, and it's clear as day. So you as an entrepreneur, you as a creator, you as a marketing and technologist really need to think about this, because the penalties are going to be quite severe. And not only do you have to think about what's going to happen to you, but think about your investors and the people that are buying these tokens and buying these NFTs and participating in what you're doing, because they're the ones that are going to want to be able to get the benefit. So I think it really comes down, and I'm trying to do this all in 10 minutes and trying to put it all together so we could talk about this for hours. But again, if you think about how you can do it, so there's opportunities outside the United States, like our exchange. I would encourage everybody to go to your favorite app store, download our app. It's called Upstream. We're 3.5 years in the making. We came live. We actually have the ability to take securities that are listed on any major market in the world: New York, NASDAQ, Tokyo, London, Hong Kong. We're part of what's an affiliate member, what's called the World Federation of Exchanges. So there's 250 global exchanges in the world, and we're one of them. So that means if you're doing an offering, you can do an offering the right way. You can do it by a prospectus, and you can sell it to international investors, and you can allow them to come in and participate. Most importantly, those investors will have clear disclosure that they're going to be able to make informed decisions. If stocks or NFTs or investments don't work because the investment didn't work, that's okay. But if you invest in something and there's a rug pull, or you invest with somebody that is a nefarious bad actor, that's a problem. And that's something that's not fair to investors. And that's where investors need to be able to have the ability to make informed decisions and do it in an informed background where they can make decisions that they know were based upon accurate information. The other thing that's important, and this is something I talked about last year and nobody really, again, paid attention, was something called commingling or omnibus. And we've now all experienced that because we saw what happened with FTX, we saw what happened with Celsius, and that's something that's really important that everybody needs to think about, because if your funds are commingled with others and it goes into bankruptcy, it's going to be lost to the bankruptcy court. So it's important that you look for segregated accounts. You look for the ability to make sure that your assets, not only the security or the NFT is held in your own possession and that you hold the keys, but the cash itself is also in a safe environment. For us, again, as the exchange, we have the ability to offer that. Every account comes with $250,000 of FDIC insurance. They're segregated accounts, so if you were to lose your money or we were to go out of business or something would happen, you can go down to the bank and actually retrieve it. And we as Americans take that for granted, but in the rest of the world, FDIC insurance isn't something that's really available to you. So I'm going to try to go back here because this is what's the most important thing, and it's the Howey test. And these are things that you need to think about before you do your offering, before you float that NFT, before you do that fractionalization of art, music, whatever it might be. And NFTs are really cool to be able to offer that ability for investors to come in and all the things that come with that NFT to unlock the content, to have memberships. And that's another thing. Memberships that have equity ownership is a security. Again, if it touches the Howey test, an investment of money in a common enterprise with the expectation of profit to be derived from the work of others. That's the rules, and it's important that you follow it. I did it in 9 minutes and 30 seconds. Any questions? Yes, sir. It depends on your custodian. A 401k and an IRA is actually for the benefit of, it's a trust custodian. So there are certain types of custodians here in the US in trust services that offer that. So in theory, again, the NFT is the acronym. In reality, if it's a security and your trust custodian will allow it, then it can happen. Yes, sir. An NFT driver's license? No, that would be an image in that circumstance because there's no investment of money. There's no expectation of profit in a common enterprise. That would be a great use case of how an NFT would not be a utility, in my opinion.
It's okay, I got him.
Yes, sir. No, so that's a misconception and a confusion. So what's going to be interesting to see is that if you're effectuating the sale of an asset class and you're taking a commission in that circumstance, does that marketplace need to register as a broker-dealer or as an exchange? As a regulated person, I'm not speaking as a regulated person here today, I just need to give that disclaimer. I would argue that if you're making a commission and you're taking the fees, you have to. The individual, and we just saw it here with the Howey test, I'm sorry, with the, well, it's actually the Howey test that did it, with NBA Top Shot. Now that's a civil action, but they're being accused of basically dealing in unregistered securities and acting as an unregistered broker-dealer, and that those assets that were traded on NBA Top Shot, which is that closed loop, you can't move those assets out of it. It's basically JPEGs and videos, are securities. So it'll be interesting to follow that case to see where it all ends up.
Should be good. Hey, give it up for Mr. Mark Elenowitz.